You are experiencing yet again another wild day on Wall Street. We're going to get into exactly what is happening so far in the day and everything you need to know on AMC Stock. There's a lot of banking news that is coming out. We're going to have some Fed speakers as well that I want to highlight on. And if you guys did not see the last video, there is major important economic data coming out this week that you guys need to be familiar of. So we'll also touch on that. So we have a lot to get into in a very limited amount of time. Hit that like button, subscribe to the channel, and source your comments or questions or concerns down below in the comment section. So the first thing I want to start with is a little perspective for everyone, because AMC is down 2.35% on the day, which gonna piss a lot of people off. Maybe. I really don't care. This is a strong day for AMC. Yes. Strong day for AMC. When you consider even well-respected and well-liked technology stocks like Apple down 1%, or Facebook, formerly known as Facebook at least, now trades under Meta, is down 1.5%. And these stocks are really underperforming the markets by a great deal today. So when you're seeing higher quality names getting just whack-a-moled like you are today, it's hard to say that AMC only being down 2.35% is bad. It's really hard to say that. You really can't make that claim. So number one, relative strength on the day is definitely positive for AMC, all things considered, right? Relative to where AMC really should be, or how much it should be down when a Facebook or a Meta, I'm probably always going to call it Facebook, when Facebook is down 1.5% and Apple is down a solid 1% on the day. I will take 2% down any day of the week. S&P 500 up almost 0.25%. Now you are getting some new information on kind of this banking situation as well as crypto, and this one is actually interesting because it could be the next domino to fall again, and it would probably be a lot worse this time around. So first things first, the U.S. sweetened the deal with SVB, gave them a little bit of reassurance, more or less, that they're not going to lose a whole lot of money. And that was First Citizens Bank that acquired SVB's assets, or at least a big chunk of them. And that is causing stocks like First Republic, some of your other regional banks, to be green today. And I think that is really offsetting the massive red you would see in the indexes if this were not the case. If there was more banking fears today, the markets would probably be deep in the red. And again, you had another Fed official, Michael Barr, come out today and say the same thing that everyone else has said, that the banking system is, quote, sound and resilient. And at this point, it kind of makes it seem like it's not sound and resilient, hearing the same thing over and over and over again. But today, the markets are liking it. So, hey, I'm not going to argue with it. Now, this I think is a little bit more interesting, and I think could have bigger implications for the markets over really the next day or two, just because of what crypto has done recently. Now, obviously, if another bank goes bankrupt, that's going to hold precedence over this. But until we get more developments within the banking sector itself, or this major economic data that we're going to talk about here in this video, I think this is going to be very important. So it says Binance and founder Shipeng Zhao violated compliance rules to attract U.S. users, CFTC alleges. Now, this could get interesting because there's a lot of different ways this could either be resolved or escalate into a bigger problem. And I mean, Binance is really one of the last brokerages standing. I mean, you have Binance, you have Coinbase, you have, I believe, is Gemini still in business? I'm not even 100% sure. There's not a lot of them that are still out there that are more reputable, right? There's going to be a lot of your secondary, third tier kind of exchanges, but the ones that you really know about, that you would trust putting your money there, quote unquote, trust, you don't want to see this turn into a bigger situation. So I want to monitor this very closely. I will bring you guys updates. Not too much else to actually say as of right now, but typically once these litigations, entities start investigating people, it doesn't usually end very well. So that could actually rock the markets and be a pretty big deal if they were to face some troubles. Now that that is out of the way, let's talk about what we have in store for the next upcoming pieces of economic data, because Fed Jerome Powell made it very clear that there's going to be further firming of Fed policy. That means if inflation were to come down like a rock off a cliff, right, then there would be possibly a pause, right, or less tightening. But if inflation does not, and this banking crisis pretty much goes away, well, that's going to lead to more tightening. Now, the end result is a recession, a depression, who knows? The higher the Fed raises, the more likely that hard recession does get. And the Fed didn't sound too confident at their last FOMC meeting that a soft landing was still likely. They for sure didn't say that. And you even had Fed Kashkari that came out earlier today as well that said a recession looks more likely now after this banking crisis. So economic data that shows inflation might be going up or down is going to be huge for the markets. So for tomorrow, you are going to get the S&P Case-Shiller home price year over year. Now, why this is important, obviously, because housing is like a third of the CPI report now. So depending on what this has to say, it is pretty backwards looking. So we're going to be getting numbers for January. So it is very backwards looking, but it can show you kind of what direction things are still going in. That's going to come out tomorrow. It looks like 9 o'clock in the morning. You're expecting year-over-year home prices at 3.7% and month-over-month home prices at negative 0.9%. Any kind of better than expected results here, probably not going to be good for inflation. You're also going to get Fed Barr's testimony again, and that does come out at 10 o'clock, it looks like. Richmond Fed Manufacturing Index, this will also be important, and that does come out at 10 o'clock in the morning as well. So really between 9 and 10 o'clock tomorrow, you're going to get some pretty important data points. These are not expected to be high volatility data points, aka they're not highlighted in red here, but they are highlighted in white, so they do stand out a little bit more, and they can be kind of secondary catalyst. And in this market environment, I think they're going to be a little bit more important than what they normally would have been. So I do expect some volatility around that. On Wednesday, you get pending home sales month over month, pending home sales year over year, Fed Barr's testimony again. And then on Thursday, you're going to get initial jobless claims and GDP revisions. You're going to get PCE revisions as well for Q4, and those GDP revisions for Q4. And if these revisions move around a lot, which we're expecting them to move around a lot, for an example, GDP growth rate quarter over quarter final revision for Q4, last revision we got was 3.2% positive. You're expecting this revision to take it down to 2.7%. And if it goes down lower than that, not going to be good for, obviously, a recession. Same thing with PCE. You are expecting that to be revised down from the initial reading of 4.7% to 4.3%. If that goes higher, not going to be a good thing. And then on Friday, you're going to get the big data point that will trump any of these other data points, and that is going to be core PCE month over month. You're expecting that to come in line with what we've seen for January at 0.6%, so really not going anywhere, still remaining very elevated. And PCE price index month over month, you're expecting that to go down a little bit from 0.6% in January to 0.5% in February, and year over year, you're expecting that to go from 5.4% to 5.1%. And personal spending, get this, for January it came in at 1.8%. You're expecting that to fall all the way to 0.5%. So worst case scenario here, personal spending goes negative, and your PCE year over year and month over month go higher. That's going to be like the worst case scenario, showing that people are spending less money, you're going into a recession, and inflation is still going higher, because usually it takes a recession to beat down inflation. So that's what we have in store for really the rest of this week, but kind of day by day, there's going to be some things every single day. Now, the Ortex data, let's get into this because I think it's pretty interesting. The short interest is now sitting at about 25%, so going up by about 0.5% just over this weekend. Ortex has obviously revised their numbers up. The shares that are sold short increasing by about 4 million here today, now sitting at 129 million shares that are currently sold short. Cost of borrow average 391.22%, cost of borrow max 398.46%, and cost of borrow minimum at 359.06%. So cost of borrow rates being this high is telling you a lot, and you better freaking listen, okay? You want to pay attention to the cost of borrow rates. You want to pay attention to what institutional and hedge fund investors are lending out stock for. I think that is vitally important because it tells you a lot about, one, supply and demand, but more importantly, the risk that is associated with shorting AMC. The volatility that is expected just continues to go higher and higher, and I think that's likely the case heading into April 27th. And I do think the lower you sit at these prices, this is really an accumulation phase after we have bottomed out recently and finding some resistance, right, at 450, but this is more or less a accumulation phase, and this is trying to find price discovery with the expectation that this is going to go through as normal. So the 1-for-10 reverse stock split has happened. I don't think many people are expecting this to get rebutted in the court system. I don't expect investors think that, in other words, the judge is going to cancel the vote. I don't think that is priced in. I don't really think that's probably going to happen. It's possible. It does make sense, the argument that is being made. I think a revo is probably a little bit more likely. And I do think that sets you up for some big upside from here. And this is a really good price to be doing that at. So I do think a lot of people are going to kind of switch their perspectives, and the volatility of that exact same thing is prevalent in the cost of borrow rate. So I'm going to be watching those very closely to see if they even go higher from here, if they hold these levels, or if they fall. If they fall, obviously that would mean that volatility is becoming less and less, and you can expect a smaller move. Like I said, though, as far as the charts, AMC getting rejected at 450 again. Between $4 and 450 looks like very strong support levels. At $4, obviously, and then a resistance at 450. I think we do break 450 when we do get some news. And I think when we get some news, you're probably going to see a 20% rally that day. And news being something on this court litigation situation, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.